Out of context, facts and figures can easily mislead. Is Africa's growing population a weakness? What about tomorrow? Don't get boxed in by today's opinions. With the Africa Report, understand Africa's tomorrow today. Politics, business, opinion, the Africa Report decodes the news for you. Available online on theafricareport.com.
Good morning, good afternoon. Thank you for joining this Renaissance Capital panel discussion in celebration of our 25th year anniversary as a full-fledged investment bank in emerging markets. Yesterday, we had a panel session discussing fintech trends in Nigeria, spanning across payments, cryptocurrencies, and embedded finance. After Nigeria, Egypt is one other market where we find some of the most exciting financial technology opportunities in Africa. It has produced the first listed unicorn on the continent, and is set to produce even more listed fintech vehicles in the near future. All things being equal, we expect that by end 2021, Egypt could have the most listed fintech place for investors to access in Africa. Today's panel brings together some of the top private investors that were early to spot some of the most exciting fintech opportunities on the ground, as well as some of the major fintech players in the ecosystem who focus on areas spanning digital, cash transactions, and payment aggregation. Our aim is to discuss the evolution of the sector, where we are today, enabling pillars of the underlying momentum, and what the future looks like. Please drop your questions in the comments section on YouTube or on the conference website. Now, I'm delighted to welcome our panelists and thought I'll start off by giving them a minute each to introduce themselves and what they do. So we'll start off with you, Ashraf, then Ayman, Moataz, and by no means least, Hossam. Ashraf.
Okay. Well, thank you very much for the invitation. Just a little bit of introduction. I'm the founder and CEO of Fawry. Before that, I worked for a company called Raya. And before Raya, I worked for IBM. By graduation, I am a civil engineer. By experience, I worked in finance, business development, sales, technology, and probably that's it.
Ayman?
Hi, it's Ayman Dessouky. Thank you for the invitation. I'm the CEO of Ebtikar, an investment company in the non-banking financial services sector. By education, I'm an electrical engineer, and I've worked previously with IBM in the Middle East and Vodafone in the UK and in the Middle East.
Moataz?
Yeah, thank you very much for the invitation. I'm a computer engineer 30 years ago. I started with the telecom wave in the Middle East. So I worked with multiple operator. Last was Orascom Telecom in Egypt. Then I moved to Netherlands working for Vembelcom, Russian company out of Netherlands. And then I'm back as a CEO of Khales, which is a fund company of e-finance. Thank you.
And Hossam?
Thank you for having us, Suji. So my name is Hossam. I'm a partner in Actis. I'm not an engineer, unlike my colleagues, but I understand the sector a little bit. So basically, what we do as Actis, we invest across emerging markets in a number of sectors. And what I do personally is I lead a team that focus exclusively on investing in financial services across emerging markets. We invested more than $1.2 billion over the last 10 years in about a dozen platforms. Half of them are in payments. From Latin America to Southeast Asia, across Africa and India. So we have some experience in the sector.
Okay. Fantastic. Look, I'm also not an engineer. My name is Adesoji Solanke. I'm moderating the panel today. I look after Renaissance Capital's frontier banks and fintech equity research. With that, let's jump into the conversation. My first question is to you, Hossam. There's a lot going on in the Egyptian fintech ecosystem today, but before we dive into it, I would like you to spend a few minutes helping us paint a picture of where exactly Egypt fintech is at in its evolution.
Sure. Look, before talking about fintech, I think they're just defining the financial inclusion in Egypt, which is defined as 20-25% of the population. It's about 1/3 of the other population. This is not very high compared to peers of the same demographics or the same economic stage. But basically, it's you can think of the evolution of financial services and the fintech space as an S-curve, which starts with growth, followed by a hyper-growth stage, and then a maturity stage. And there is like a kink in the curve or a tipping point that happens between the growth and the hyper-growth and the hyper-growth and the maturity. So we believe that Egypt is just in the initial stage of this tipping point going from growth to hyper-growth. And this is driven by a number of things. Of course, technology is the biggest driver, hence the fintech revolution that we're seeing, because technology enables companies to be able to reach consumers, and these consumers can be unbanked or underbanked consumers or businesses that are not covered by the kind of traditional banking infrastructure. It gets to know them, which is unusual in an environment where the credit bureaus cover only a small portion of the population, like most emerging markets, and can offer various services across the platforms that are being offered using technology. Hence, I believe that the Egyptian fintech environment is very vibrant, and we're going to see, in parallel to the change of behavior of consumers and businesses, growth in a number of verticals across financial services, mainly driven by technology. We saw this in the payment space when we started investing in the payment space about 10 years ago. We invested in an Egyptian payments business about 10 years ago. Back then, the share of electronic payments in kind of the consumer spend in Egypt was 1% of the spend. Today, this figure is maybe 4%. So you still have, so first thing is it grew by more than 400% because going from 1 to 4%, plus of course the economy is growing, but we still have 95, 96% of the spend and the consumption taking place in cash. And this is the biggest area that is going to be disrupted. And of course, all the ecosystem created around it. Secondly, of course, is the regulatory environment. So you have on one hand, the Central Bank of Egypt pushing the agenda of the digital acceptance, kind of investing in the QR code, kind of pushing QR code to the market, supporting acquirers in the acquisition of point-of-sale machines. So there's a lot of activity happening there, and also pushing for innovation, like the kind of electronic KYC, where basically it allows consumers to do the regulatory requirement of KYC electronically and not having to walk into a bank's branch. All of this is happening as we speak, and it will result into fintech businesses growing and evolving to grow around this space. And then on the other hand, of course, the kind of the Financial Regulatory Authority, which regulates the non-bank financial services businesses, that is currently issuing a fintech law that will allow all the non-bank companies to offer their products and services electronically through fintech propositions. So you'll find a place, for example, to sell saving products. So because of these drivers, as I said, I think Egypt is just about to start this hyper-growth stage in the fintech space.
Okay, that's really good. The S-curve you've used is a really good analogy. So going from growth to hyper-growth and maturity, and Egypt, like you said, is just at the tipping point of the growth to hyper-growth stage. But I want to stick with you, Hossam. Could you quickly help the investors who are listening better understand how you approach and get comfortable with valuations of fintech companies? Many, I find, still get puzzled about the valuation multiples, which is understandable as this type of companies are new to the listed frontier space. So it'd be helpful to know how you think they could get comfortable with the valuations.
Well, look, I think valuation is valuation. There is a clearing price that meets supply and demand. But the main driver of understanding what is the real value is probably driven by the same fundamental factors that affect valuation in any other sector. So the number one thing is, of course, is growth. What is the growth trajectory of these businesses? And as we said, most of these businesses are going through a hyper growth stage. So this hyper growth or very high growth year on year that we will see or expected to see will have an impact of how investors should think of the future cash flow generated. The second thing is, it's many of the fintech and financial services businesses and payments, as kind of most of my colleagues on the panel are involved in payments businesses, have this kind of stickiness quality, high quality of earning type of transactional revenue, where basically it will keep on regularly coming in. The revenue will keep on regularly coming in because it's driven by change of behavior of consumers going from cash to non-cash. It is not hugely impacted by macro or whatever. It's basically once consumers stop using cash and use electronic payments, it's a lot more efficient, a lot more convenient, it's easier, it's cheaper, and it's better for businesses, and there is no comeback. And kind of, as I mentioned, it's transactional and it's recurring. And then thirdly, of course, it's a very nice business model. You don't have to worry about high capital expenditure of building factories and depreciation. This is a nice kind of cash flow generation type of business. So you have to factor all these factors when you think of valuation and not compare kind of a very high growth payment business in a market that is still at the early stage of growth and compare it to a well-established industrial business. These are two different businesses and they should be valued through very different lenses.
Okay, thank you very much, Hossam. What I've heard you say is it's key to pay attention to growth and its underlying drivers, the changes in consumer behavior going from cash to non-cash, and the fact that this sector tends to be less impacted by micro drivers. And it's also not CapEx intensive like traditional businesses. All of these things investors need to factor in as they think about valuations. Thank you for that. Now over to you, Ashraf. The regulatory landscape in Egypt has gotten more accommodative of technological innovation in recent years. As an operator, do you think you now fully have regulations in the right place that allows both large and emerging fintechs to build and innovate at scale? Or what else would you still like to see?
I think we have, the laws that are in place, okay, are actually real enablers for growth. So, we have two laws that have been recently available in the country. The first is the new banking law. The new banking law is availing banking APIs, is availing digital bank licensing, is available e-money licensing. So there are many things happening on that front within the law. On the other hand, the government have issued another law for electronic payments, okay, which is mandating that businesses beyond a certain size would actually have to use some sort of electronic payment, whether in disbursing money to their employees or suppliers or in collecting money from their customers. So within this framework, there is a good ground, but the devil is in the implementation. And I think what is important right now is that how the regulators will adapt to the speed required by the fintechs. So you might have all the rules or you might have all the things that are encouraging you, but if the regulator is not responsive in terms of time and the spirit of time, I think this can be a showstopper. So I think what is mainly required is actually speed in implementing those regulations. Additionally, as you probably know, fintech boost is because of last mile solutions. So I mean, when you look at any fintech, I mean, at the end of the day, it is about creating convenience in the last mile to the consumer. And this requires open platforms. This requires being more open, availing more services so that these things happen more quickly. So I think between those two, speed of implementing the new laws and the new regulations and opening up the other platforms so that people can make use of them to reach the customers in the last mile.
Okay, thank you, Ashraf. So numerous enabling regulations are in place, including those mandating companies to have digital accepting capabilities. Implementation, however, is key, and hopefully regulators are able to keep up with the pace of innovation. Okay, now over to you, Ayman. Ebtikar is just over 3 years old, but you've very quickly built a top 3 payments player in Egypt when you might combine Bi and Moussa, possibly. Can you help us understand the competitive landscape and how Bi and Moussa fit into this?
Yes, we started in 2017, but our investments in the payment industry started in 2018 and through 2019, where we now have majority shares in 2 major players in the payment industry in Egypt. We saw the opportunity. Hossam was talking about moving from the growth to the hyper growth phase. We saw that a bit early, and we decided to invest in those entities. We believe the potential is huge. I believe that we are only scratching the surface in terms of the payment industry in Egypt, and payment is only one part of fintech. We've already invested as Ebtikar in other areas other than payment, like microfinance and mortgages and leasing, and the room is there for untapped opportunities in insurtech, regtech, investech, and all are parts of the fintech evolution we see around the world. What we are doing on the payment side, collectively, I mean, Ebtikar and other players in the market, is serving the current momentum that is created by the Supreme Council for Financial Inclusion and Electronic Payment, and by the initiatives of the central bank and the new laws that my colleague Ashraf referred to. This is opening doors for payment companies to transition from the growth phase to the hyper growth phase. We believe that the industry is an attractive industry to invest in, that the growth is probably unmatched in many areas, and especially in Egypt in many industries, the potential growth, and investors should look at it, as mentioned before, as a lucrative business model that is still in its not infancy, but still in the early stages with a lot of growth potential. We saw that with Bi and Moussa. We thought that we would invest in both. We are not planning to merge the companies currently, but we have created a lot of synergies between the two companies. And in many areas, they operate as one, but in other areas, they operate as two separate entities in the Egyptian market.
Thank you very much, Ayman, and thank you for the clarification as to how exactly BI and Masari operate. You saw the opportunity early on, invested early on, and you do believe that growth in the payment space is therefore unmatched when you look across many sectors in Egypt. Now I'm going to come over to you, Moataz. It's been interesting learning how the payments landscape in Egypt stacks up. How does Khales maintain its unique position, focusing on digital and payments aggregation?
Actually, we are very lucky as Khales to have this very unique position within the payment landscape in Egypt. We, as a billing aggregator, is a backbone to a very large network, having more than 220,000 point of sale across the whole country. Actually, we are proudly serving Masari and BI and Ayman as an example to offer our billing services to them. Being part of e-finance as well is giving us a very unique position because this has enabled Khales to offer many services, mainly coming from the governmental services and citizen services. So we are a payment tool and payment method for different services coming through from the government. This will make us in a very unique position. Additionally, Khales places increasing focus on the financial inclusion on top of its priorities, in line with the Egypt strategy for sustainable growth 2030. And the global trend for sure that is taking us on this digital landscape. Hence, we put more effort and focus to help the Egyptian consumer take the whole journey, the whole digital journey, starting from where we are right now, when we are talking about the last mile, which is the cash and the physical channel, how we will move this into cashless, even with digital, with physical channels, like the example of the CPE initiative, 100,000 DOS, trying to push the digital payment. And after that, taking the consumer to move completely into the digital channel cashless. We are leapfrogging. We are looking to be a digital native operator. In the meantime, we're still helping our network to grow by offering more services and expanding on the services portfolios that we are offering. So we are lucky about having multiple dimensions in our position, being part of e-finance, offering a lot of service as a bill aggregator, as well as focusing on the digital and targeting our consumer in the near future that they will move mainly to the digital channels. Thank you.
Thank you, Moataz. So just to clarify, you don't own POS machines, but via your billing aggregation platform, you work with players such as B, Masari, and Ayman, who have over 200,000 POS machines. Would that be, is that getting correct?
Actually, correct. We don't own POS on the ground, and the 220, it's serving more than 14 partners. Ayman, Masari, and B is just an example of them. Those are the big players in the market right now, but they are part of the network. The network has other 12 partners in these networks that serving a lot of people across the whole country. So right now, we don't own point of sale on the ground, but we are building in the background to help all our partners to deliver the billing aggregation to the consumer at the end of the day through their point of sale.
Okay, fantastic. Thank you for the clarification. Hossam, do you quickly have any views on the competitive or regulatory landscape that you want to comment about?
I think I covered the regulatory, and I agree with colleagues. There's a lot going on to support this this kind of growth that is taking place in the market by the regulators. So it's all happening in the background. But on the competitive landscape, I think I'll just comment on the evolution. So my colleagues in the panel, mainly it's kind of it all started in the bill payment space. I think that's a common theme across the panel. And just comparing this to other markets, this is very common, where basically the airtime reload is the first basic engagement between the unbanked consumer and the electronic digital world. and it's usually one of the first electronic engagement or store of value that a small merchant can get to actually get an electronic payment or service or store of value provided. And then an evolution happens that goes from this airtime to bills, and from bills to utility bills, so the bill starts to become bigger. And then the kink of the curve happens when the behavior changes. And the kink of the curve happens in the tipping point where suddenly now the consumer and the merchant has a relationship with this provider. And suddenly there are so many options of the type of services that can be offered to this consumer and to this little small business that is either unbanked or underbanked. And this is happening as we speak. So it's a very normal evolution for the market to happen, that consumers and businesses and merchants go through this journey, and then it all leads into this hyper growth stage. And you can see multiple financial services products offered to the merchants, to the small businesses, and to the consumers through these platforms.
That was very helpful. So bill payments, airtime reload, typically where the unbanked customer usually engages first with the digital world, a dynamic which evolves over time as consumer behavior changes, amongst other things. Okay, now let's dive a little deeper into payments. And my first question here is to you, Ashraf and Ayman. Egypt is still largely a cash-driven economy, but as with many other frontier and emerging markets, the adoption of digital payments will grow. The question is, do you think this transition is happening quickly enough to make cash irrelevant soon? And how well are your businesses positioned for how you see things evolving? Ayman, you can go first, then over to you, Ashraf.
Thank you, Zoji. Egypt is moving at a high speed, but I don't think cash will become irrelevant in Egypt anytime soon. In the coming 3 to 5 years, cash will still be a dominant payment method in Egypt. And let me give you some insight into why is that. If we look at consumer spending in Egypt, we'll talk about in excess of $1.5 trillion in terms of household spending. I'm not talking about the full cash utilization or circulation in the Egyptian market. E-payment companies manage less than 10% of that. And what e-payments companies do is that they take cash from consumers and somehow digitize it. And it gets into the banking system and the corporate system in a digital format. But then it goes out again somehow into consumers' hands, and it is consumed again to buy products or to buy services that are not digitally enabled. The central bank mentioned that at some point in time in 2020, there is 540 billion Egyptian pounds that are circulating outside the banking system completely. And if we look at consumer spending, I would say that from the numbers that come out from the statistics authorities, over 60% of the household spend in Egypt is on food purchases, healthcare, transportation, rent, all areas that are not addressed by fintechs or by payment companies, let alone the B2B side of the business. If we look at e-payment companies, for instance, 70% of the revenues of e-payment companies, but it's declining now, comes from telco recharge and bill payment. That part doesn't go through e-finance because it's not government. Another part, another big portion, and you'll see that in our colleagues' results that are announced, is B2B collection, which is a pure cash management operation. It is not a digitization operation or a fintech-enabled solution completely. And that's the majority of the current turnover and the current transaction value for e-payment companies. And for that to change, the consumer behavior is one thing and is being promoted by the central bank, driven by initiatives like the local payment scheme of Moussa, the penetration of Moussa cards in the Egyptian market, the use of wallets. We have millions of wallets in Egypt. The issue with the wallets, mobile money wallets in Egypt, is that the utilization is not high. You have lots of customers, but not many of them are using them. And this is a two-sided issue. It is because of the consumer behavior, the willingness of the consumer to use a mobile money wallet to pay for a product or a service. But on the other hand, it's the acceptance side as well, because there are many retailers and service providers in Egypt that prefer to deal in cash. And this will take a long time to change. So I would say that we are moving at a high speed, not at the maximum speed or the desired speed. There are lots of national initiatives that are driving that, but cash will not become irrelevant in Egypt in the coming 3 to 5 years. The utilization of cash will decline, but we will not be a cashless society in the coming 3 years.
Hey, Ashraf, I'm really keen to hear what you have to say on this question.
I think the more you create value from an electronic payment, the quicker adoption for businesses or for consumers or for merchants will happen. And what I'm seeing right now is that there are many areas where really there are opportunities to create value to the different stakeholders by not using cash. The idea of promoting electronic payment alone as something good is something that is not really, I mean, when you go to small merchants, for example, as Ayman said, I mean, they don't care whether they are selling their goods in cash or selling their goods electronically, okay, by electronic payment. But there are other areas that will show, I mean, high growth in electronic payment very quickly. Digital services. Any service that can be rendered digitally will be rendered over the mobile platform very soon. I mean, because it creates convenience to the consumer, and it creates availability to the consumer, and it creates benefit to the enterprise. Areas like the B2B, the more you move electronic payment into that space, the more you create efficiencies for the enterprises, for the FMCGs, not for the merchants, but more for the FMCGs. So I think there are lots of things happening. The curve and how it will happen in this world is really, I mean, it is not linear. I'm hearing some noise. So
Likewise.
Are we back on track?
Yeah.
Yeah, okay. So I think the evolution will happen. It is not linear. It will be actually, I mean, algorithmic. I mean, so we will find that the curve will, at a point of time, come very quickly in turning into non-cash. But the other thing that should happen, I think that we should always find who is creating more value in the electronic payment supply chain, and he should be the person or the entity that is paying for the price of the electronic payment. And this is normally not enabled in many parts of the ecosystem. So if you come to small merchants, for example, they are not the beneficiaries of electronic payment. Maybe the FMCG companies are the beneficiaries. If you come to government services, for example, who is making actually benefit out of electronic payment? The consumer is not gaining except if he has the payment on a digital device. But those who are gaining are the government itself because of revenue leakage, because of efficiency of the cash cycle. The central bank and the banks are gaining because I mean less cash being printed, this cash in circulation, more funds in the accounts of the banks. So what I'm trying to say that we should review and revisit who is making value out of the electronic payment, and those should pay. Once we do that, and those who make benefit pay for the service, I can assure you that the adoption will be much quicker. So we have to really think out of the box, and we have to really stop looking at taboos within the electronic payment ecosystem. that we have to follow, because I mean, the major successes that happened around the world, if I would consider China is really the major, because I mean, Ant Financials and Alipay, for example, they started in 2010, very soon. Okay, I mean, 2010 is 7 years or 10 years. Okay, so a complete conversion happened in China, in the urban areas at least, to electronic. Okay, so it took 10 years to transform a country like China. Okay, so it could, I mean, and you can imagine the size. So it can happen very quickly, but we have to challenge the business models. We have to challenge the legacy systems. We have to challenge many of the things that can make things happen quickly. But if we follow the same guidelines and the same legacy that is in place, the legacy is actually fighting the electronic payment while appealing to help. So I have an example, a country like China have made adoption in 10 years, hundreds of millions of people, not like the Egyptians, and it happened. So we can expect things. So this is my input for that.
Okay, thank you very much, Ashraf and Ayman. So I've heard you say cash will still be king, and e-payment companies manage probably less than 10% of transactions in Egypt, with majority of the revenue still coming from airtime, bill payment, and B2B cash payment management. MISA and regulatory push have their role to play, but adding value to the customer and the merchant will be critical to driving the adoption levels over time. And Hossam would help us break down this topic around what can we learn from other markets. We're going to look into this a little bit further down. Moataz, this question is for you. In late 2019, eFinance seized on Khales' growth potential by taking steps to establish it as an entity in its own right. What does the future look like for Khales in the digital and offline world over the next 3 to 5 years? And how far are you along that journey today?
Okay, thank you very much for the question, but let me comment one small thing on the previous replies, if it's possible. Just, I cannot agree more with Ayman that we are not running on the right speed. Maybe we need to go faster in converting into digital thing and electronic payments. But I would like to say another example from other country like India, where PayTM is growing very fast and in multiple of numbers of customers just added to it. And this is where Khales started. Khales was started as a business line within eFinance. Late 2019, eFinance believes that it's a huge opportunity in the consumer payment sphere and the digital transformation, financial inclusion on the country level, and decided to spin off Khales, yet keeping all support to ensure the success of the new created entity. Looking into the other countries and the other examples, we do believe that there will be a turning point where we will move from growth to very high growth in just one transaction, and we will find us following the Indian model, that everything is just to grow very fast to the e-payment model. As we see most of the cash, we have a different view here. As we see most of the cash transaction today will convert into cashless within the time frame that you're talking about, 3 to 5 years. And we are expecting that most of the transaction will move into digital channel. And as an example is coming from right now, government is just offering most of the governmental services through Digital Egypt, for example, initiative to the consumer through digital channels. So we are expecting that it will move to cashless and digital, a lot of services. And if we are focusing on the telecom and all this stuff airtime, although we are not part of it because most of our partners in the network are having this directly, we don't have a lot of contribution on our revenue coming from this, but we do believe even this will move into the digital one when we have the benefit, as Ashraf said, for the business model, how we will create the right business model that we will see who is beneficiary out of this and we offer it. What we are doing actually is we are not building on top of our legacies. We are trying to be a digital native. We move out of legacy, because if we go and build on top of legacy and try to convert into digital, we will be just legacy plus and try to scratch the surface and see that we are digital. We are trying to be a completely digital native. We are looking to capture the digital transaction and having a leading seat in this regard. We already have soft launch for a lot of digital channels that we are already launching. Launching it would facilitate a lot of services to our consumer. And we are trying to convince the consumer that he can have the convenience and the flexibility by using those digital channels and receiving the service. In the meantime, we as Khales will continue to support our partners in the network, and we will continue to offer them more services and ensure that they are successful. From billing aggregation point of view, we will continue to increase the portfolio of those services to our consumer by adding governmental services that is being offered right now, and most of them are, not most, some of them are offered through digital channel. We'll continue to try to be the convenient payment method and the channel for the digital services that are offered by government and other service providers in Egypt. What we are looking for to be the payment of the choice for the consumer. And we do believe that the turning point will come. The curve, it is e to power x. So whenever we come to it, we will find, since we are mostly engineers, 80% are engineers, so e to power x. We do believe that there is a turning point, we'll convert the curve immediately, and we move directly to cashless transaction. And I do believe this is the agenda of the country, and this is where the country is pushing for. And this is an example coming from other countries around the world. And again, I'm referring back to the Indian model, BayTM, Alipay for sure in China, and there is a lot around the world. Thank you.
Okay. Thank you very much, Moataz. I like the contrast on this panel. So I hear you saying you think the transition to digital will happen quicker, with government push being one pillar supporting that. Khales' focus will be to be a digital native, and you're already making progress on a number of fronts while supporting your e-payment partner companies. I'm going to come to three of you now. In terms of how payments facilitation businesses typically evolve nowadays, we find operating a proprietary wallet as part of the full stack. But in Egypt, the banks and telcos run the wallets, while to date, players like yourselves merely support and facilitate payments. How critical do you think it is to operate your own wallet vis-a-vis competing with your major clients? And how do you assess the trade-offs from owning the data and consumer relationships, which open up so many new frontiers for you in the digital ecosystem? Ashraf, you can go first here, then Ayman, then Moataz.
Well, I think, yes, as you rightfully said, the ecosystem of the wallet in Egypt is a typical four-party model. This has its benefits, okay, whereby interoperability between different wallet providers is available. On the other hand, it has its disadvantages because of the cost structure where there are many parties involved. However, you are right. I think we will not, in Egypt, this is my belief. I think, there will be a couple of successful initiatives, and because of the competitive landscape, the model of M-Pesa in Kenya will not evolve in Egypt. The market will not be dominated by a single player. Or the model of Alipay in China will not, because now you have all the operators are competing, you have all the banks are competing, you have companies like Fawry, with my Fawry have their own offering, you are having, so what I'm trying to say is this will be a little bit fragmented market for some time, and either if companies like us will go into that route, absolutely, but in all means, I'm not sure that the evolution of the wallet ecosystem in Egypt will follow similar trends like what happened in Kenya or in China because of the competitive landscape. So it will take some time to consolidate. It will take some time to have some of the players dominating, but it will not be, somebody who will lead the market. But yes, so I think that consolidation will happen. There will be maybe 4 players or 5 players who will take their shares out of this market in the distant future.
Okay. Ayman, do you have a view on this? You're on mute.
You're on mute, Ayman.
As mentioned, thank you. As mentioned, the competitive landscape in Egypt has a lot of players now. No one has a clear advantage over the others. Telco companies have the advantage of having a very large customer base, but all of their mobile money wallets are also backed up by banks. So they have to execute it through a bank. One of our companies, just in September, received provisional approval from the central bank to launch its own mobile money wallet. We already have a payment application that's a closed loop payment application in the market with more than 500,000 customers. There is potential in that. There cannot be 50 successful mobile money wallets in a market. So consolidation is bound to happen, and some of them will be subdued over time. The acceptance model in Egypt still will be not largely, but in a large part of it, dependent on the card acceptance model to start with, followed by the QR code acceptance, which is driven by wallet adoption and wallet penetration. Those two, of course, are two vehicles to reduce cash circulation. How fast will that happen? We all have different opinions on how fast will that happen. I do believe there will be a hockey stick effect at some point in time where the increase, and this we all agree on, is that the increase will become exponential at some point in time when there are several forces that are pushing for the adoption of digital payment or electronic payment on the consumer side and on the merchants and the service provider side. So yes, it will be part of the ecosystem going forward, the mobile money wallets. The data part, we don't have as relaxed rules as the personal data sharing rules of the European Union or the US. So that will be a part that will not be as flexible. So we will not have that luxury of full banking services on a mobile money wallet soon. But even if we have that, it is still backed up by a bank. So you don't have anything in the regulation in Egypt that allows a completely independent mobile money wallet that runs in separation of a commercial licensed bank in Egypt. That's my take on the matter.
Okay, Moataz, you want to chip in here, shall we?
Yeah, absolutely. Actually, I would like to say here that the wallet will be the game changer. Maybe what success in other countries may happen. So I'll take the example of M-Visa. M-Visa is running more than 60% of the GDP of Kenya for a certain time that is running within M-Visa. But when they are trying, the same company trying to repeat it in Tanzania, they failed completely. So there is a specific condition for each and every country. So I understand this perfectly. But the mobile wallet in this part of the world will be a game changer. Why? Because it will address the new generations that they are digitally enabled. Most of the new generation right now are looking into mobile as their close friend. So they will, afterwards, they'll find a way to have this mobile as their wallet, and they will use it instead of card and all this stuff. How ready we are? This is the question. Actually, right now we are really running after find a regulation to have a unified interface that I can integrate across multiple systems, across payment by card, payment by wallet. There is regulations that started and they are trying to unify and all this stuff. That's why we have right now more than 30 wallets coming from different angles, all backed up by banks. We as Khales believe that we would like to be the enablement platform for different wallets. We will be agnostic on approaching different wallets and availing our service. For sure, the billing aggregation is our key strength, and we will avail it to different wallets. In the future, are we going to build our own wallets or white label our wallets with banks or with operator? This is something that we are working on it right now. What I would like to say, the limit is the sky. Nevertheless, I would like to add one thing about the data. Right now, Egypt, we are lucky that we are working in Egypt. We don't have something like what you have in Europe, GDPR or something like that. So when you know your consumer, you will be able to have a targeted campaign and targeted offerings that will increase the value propositions that you are given to your customer. And hence, you will add more values to your ecosystem. you can collect a lot of information from the wallet. So the wallet itself, it's constrained by the regulation, it's constrained by the maturity of the environment and the consumer understanding and beliefs. But the most important thing, and underneath the wallet, is collecting the data. And the data will be the king, not the cash will be the king. The data will be the king moving forward in this domain. Thank you.
Okay, look, once again, I really love all your responses to this question. So I'm hearing in Egypt, the market will not be dominated by a single player as the banks and telcos are all waking up to the competition. However, hearing different views that you're not sure the evolution of the wallet ecosystem will follow the same path as Kenya or China. In Egypt, all wallets must be backed up by banks, and B, for example, now has a wallet approval in partnership with a bank. And the acceptance model in Egypt would likely follow the card route first, then QR codes. Regulations are a constraining factor, but good to hear Moataz's view at the end that the wallet will, however, be critical to addressing the needs of the smartphone-savvy population. I'm going to move over to the next set of questions here. I'm coming to you now, Hossam. I'm really keen to hear your thoughts on this question. With Actis being such a successful private equity investor in major markets, having backed such names as Stone in Brazil, EMP now in Network International, and GHL in Southeast Asia, which is somewhat similar to Fawry, which fintech opportunities have you seen in other markets that could really succeed in Egypt, and why?
Thank you, Sushi. Look, I think I'll touch on your question and just comment on my colleagues' responses to your previous question because they're linked. So basically, look, it's different markets go through different journeys through this S-curve, but they're different journeys, but they rhyme, and there are a lot of similarities. So what we heard from my colleagues on the panel were basically Ayman is saying, look, it's cash will continue to be king. Ashraf saying who will actually pay the cost of this electronic transactions. Let's look at other markets. In the US, which is one of the more developed markets, still 50% of the transactions are in cash. I think the most cashless society is probably one of the Scandinavian countries would be what, 30-40% cash. So cash will remain and cash will stay. But we are kind of currently estimated anything between 5 to 8% electronic payments. So even if we go to 20% electronic payments and 80% cash, we're doubling the market twice. So there's a huge opportunity. And then there is the challenge of, so who pays for it? If, as Ayman said, look, it's merchants still don't want to accept cash. It's acceptance can be expensive because the merchant needs to pay a cost. But that's if the acceptance is only acceptance. I think what Ashraf was referring to is actually what other services, and that's why I'm linking this to your question, what we saw in Stone, what we saw in the acceptance part of EMP and Jordan, what we saw in GHL, is how can you turn this cost center into a revenue center by offering value-added services on other financial services products on this point of sale machine. And then the merchant would want you to actually come and use this point of sale machine to buy airtime, to pay a bill, to pay in a different currency, when you kind of like dynamic currency conversion, when they ask you, would you like to pay in your local currency if you're traveling? All these services add a little bit of profit or margin to the merchant, and suddenly the acceptance part of the business become actually profitable, not a cost center. And this transformation we have not seen yet. So what we've seen in other markets and where there is a big opportunity in Egypt is how will the transformation happen in multiple areas. Number one, in offering multiple services to the relationships built with consumers, merchants, or small businesses. Number two, how will acceptance shift from tier one merchants with a higher spend per bill to tier 2, tier 3 merchants and add other services, other value-added services to the point of sale machine to actually justify the electronic payment for the merchant, and it doesn't turn into a cost center to become a profit center. And number three, digital wallets, which will evolve because it is a very convenient solution for consumers to pay, but also it needs to cover other things. It needs to cover the only payment. It needs to be used as a real wallet, and they can buy financial services products on it, or they can buy a saving product on it. Of course, deposit taking will continue to be in a regulatory environment. This is the law, and that's very understandable and correct. But there will be digital banks, and there will be saving products that can be offered on a wallet, and consumers will get kind of a menu of products that they can choose from, which will change the adoption or will increase the adoption of the wallet. And then people will start, once they change their behavior, they will move on the S curve. So that's kind of some of the learnings we saw from other markets, Suji.
Okay, look, thank you very much, Hossam. So I've heard you say different markets go through different S-curve paths, but there are similarities, and it's important to look at the evolution in other markets when we get into this battle about, whether cash is going to get disrupted or not. And value-added services over time will help expand the revenue mix and the margins as well for many of these companies. And you've also touched on wallets in Egypt, as these wallets will need to evolve for them to really take off in Egypt. Okay, now I'm coming over to you, Ashraf and Ayman. How do the Egyptian banks fit into the fintech picture in Egypt? And why haven't they been more aggressive so far in seizing opportunities, as would typically be the case in other markets? You can start off, Ayman can start off. Ashraf, you come in.
Okay. Yeah, I think, sorry.
Go ahead.
Okay. Go ahead, Ayman.
Banks are still not on the bandwagon for digital banks introduction in Egypt, but we have seen the first positive development in that with Bank Misr announcing it will launch a full digital bank in 2021 by Q3 2021. And this will be the first in Egypt. The banks are not reluctant to do that. It is, I believe, a matter of prioritization, but as well a matter of the value that will be provided through those digital banks to the consumers, and how consumers will accept the notion of a digital bank. There are still consumers in Egypt that feel safe with paper-based bank account handling, because they want to feel safe that they have some kind of paper with them that shows that they have that money in the bank. And we cannot ignore that. And my comments about will cash be king? Cash will not be king by having 95% of the market, but maybe that will decline to 70, to 60, to 55 over time. But still, the consumer behavior in Egypt will take time to change. The banks realize that. And accordingly, they did not want to jump into establishing digital banks just for having that sticker or post stamp on their page. It's just that the market was not ready for it yet. I want to be fair also to Egyptian banks, who are very competent, and we have a very well-developed banking industry in Egypt. And let's hope that they all either venture into establishing digital banks or spin-offs, and this is an opportunity. Why am I saying it's an opportunity from our side? Because when banks do that, they will have to partner with fintech companies and other aggregators or other providers in the market and other players. So it is an opportunity. And some of them will select just to digitize what they currently have, which is refine what they have on mobile banking and mobile money wallets and so forth. So I would like to be fair and say, yes, it hasn't moved in the right speed, but it's because the market requirements were not there, and that we already have some good news with Bank Misr coming in 2021.
Well, I tend to disagree with you. I haven't seen banks in any part of the world leading in the last mile, other than automating their existing channels. So, if you consider mobile banking is going technology, if you consider internet banking, I can tell you that the majority of the Egyptian banks are into mobile banking or launching mobile banking or have the mobile wallet. But if you look at digital banks, for example, you will find that the most successful digital banks are not banks. Okay, if you look into P2P, for example, remittance. You will find Venmo in the US is the largest. If you look into crowd financing or P2P lending, you will find companies that came in, maybe acquired by banks after that. But in the rest of the world, I don't think that the banks were leading initiatives, the new initiatives, let me say, okay? But what I can say that I think everybody discovered that the two ecosystems between technology companies or between fintech providers and the banking systems are complementing each other. It is the commercials, it is the economics, it is reaching the last mile, it is managing the customer experience. So I think there are many factors that if we work together, we can develop the digital ecosystem rather than put it in a competitive landscape. But in terms of technology, I can tell you, all the banks have wallets, the majority of the banks have mobile banking, the majority of the banks have internet banking. So I can say in terms of automation, yes, okay. But in terms of the new solutions, it didn't happen in the world, and I don't think it will happen in Egypt.
Okay, so basically, don't write off the banks anytime soon. All right, so this is for you, Moataz. What are your views on where you think the next big winners in Egyptian fintech will come from?
Yeah, actually, just as back to your previous question, I think digital, it's a DNA. Either you have the DNA or you don't have the DNA. Banks are very established organization. They have a very strong setup. So it is the DNA. Do they have the digital DNA or not? This is something I think answered by my colleagues. I think the next big winner will be defined first by consumer. The consumer will define who will be the winner. He needs an agile player, combining the wide range portfolio of services and building targeted offering based on individual persona. So we come here on data. So consumer will define who will be the winning player. The second one to define the winning player is the regulatory framework. So right now, the regulatory framework will dictate how we will move on this. Is a regulatory framework will be liberal to allow the winner to come from different or from fintech, or they would like to have the next winner coming from different areas. So this is something that regulatory will dictate to a great extent. Third, I'll talk about technology, a stable infrastructure access. This is one of the major aspects that will impact the digitalization across Egypt. Right now, 60% of the Egyptians are in urban area where infrastructure is not that great, and this will impact this. So I do believe that the winner will be dictated by different dimension, consumer, regulatory, and the infrastructure. But what I do believe is the native digital player will be in the leading seat 3 to 5 years from now, because it will fulfill the needs of the consumer. Thank you.
Okay. Thank you very much, Moataz. And for everyone else, this is my last question. Moataz, you can chip in here as well. If you were to choose one aspect of fintech in Egypt that you think will define the next 3 to 5 years, what would it be? Ashraf, please kick off, then Ayman, Hossam, and Moataz.
Mobile. Mobility is what will drive the markets in the future. And I would like to expand a little bit. The notion of a mobile wallet. Mobile wallet is not stored value. It's a mobile platform, and I think this is what we should look at: mobile platform that is offering multiple services, as Hossam said. So I think mobile would be the leading platform for digital services, and then it can be many things.
Okay. Ayman?
For me, I would say, I would agree with Ashraf on mobile. It will be the main driver for electronic payments and digitization of financial services. I would like to mention an initiative. It is not a driver. Many of the efforts that are being made on digitization and electronic payments will not yield the desired results unless we have a full digitization, an end-to-end digitization of the taxation system in Egypt. Because that would drive all service providers and retailers to have the capability to, and they will be forced by the regulatory framework, to have the setup for electronic transactions to take place. And this will not happen through the central bank initiatives and the electronic payment companies. So mobile money wallets, definitely the driver for fintech going forward. Mobile, not only mobile money wallets with the extended functionality of mobile money wallets to offer full banking services, but as well investment and insurance and other financial services. But the initiative that is holding back part of the development in Egypt is that on the taxation side, there is a lot of the Egyptian economy running in the background in a gray area where cash circulation is not going through banks and where retailers and service providers are not willing and are not equipped to accept electronic payments.
Okay, good. Hossam?
Look, I think as a channel, I agree the mobile, of course, will be the big story. But I think this point on the last mile, I would expand it into actually the customer ownership. Businesses that will own the customer relationship, will own the customer, will know the customer, will have the data, and reach the customer wherever the customer is through mobile or through other channels. And the multi-service and multi-product approach, where if it's a wallet that includes transactional, includes savings, includes other services. If it's a point of sale machine, it includes acceptance, includes other services. And I think this is where will be the kind of the success and the next big thing or the next chapter of the fintech story in Egypt.
Okay. Fantastic. Thank you, Hossam. Moataz, did you have any comment here?
No, actually, for sure, mobility, having a mobile that it's full of services, financial services, transactional services. It is a convenience for the customer to do everything from his hand. And this is where we will have the big changer in the market. Thank you.
Okay, apologies, but we do not have time to take some of the questions from the audience, but this has been a great 2 days discussing all things fintech across Nigeria and now Egypt. I found this conversation quite insightful, and I hope you watching this video did also. I would like to thank you, our panelists, today for your valuable time. The recording will be available on our YouTube page and the conference website, and I look forward to engaging with you all even more meaningfully on the fintech space in Egypt and other African and frontier markets in the new year. Thank you, and wish you good health and a strong close to the year. Take care and goodbye.
Thank you, Sergio.
Thank you, Sergio.
Out of context, facts and figures can easily mislead. Is Africa's growing population a weakness? What about tomorrow? Don't get boxed in by today's opinions. With the Africa Report, understand Africa's tomorrow today. Politics, business, opinion, the Africa Report decodes the news for you. Available online on theafricareport.com.